Okay, so started recording. Welcome once again to the Wyoming Women's Business Center webinar series. Today we welcome back Kim Vincent for part 2 of our QuickBooks series entitled Tell Your Financial Story, Create Financial Statements to Manage Your Business. I am Waldo Smith, one of the business counselors and director of microlending for the Wyoming Women's Business Center, and I will be your moderator today. Our speaker is Kim Vincent. She is co-founder and chief operating officer for Local Crowd LLC. Kim has worked extensively in both privately held and public service organizations and has worked as a business counselor for the Wyoming Women's Business Center and the Wyoming Small Business Development Center. She has a BS and an MBA in accounting and has extensive experience in assisting small businesses in financial record keeping and reporting systems. Kim has been using QuickBooks Intuit products for over 20 years and is a QuickBooks Pro advisor. This webinar is being recorded, so if you would like to view it again or have to leave early for some reason, you can find it on our YouTube channel. Just go to youtube.com and type in Wyoming Women's Business Center. Be sure to subscribe and check out our other webinars. You can also check out our website, which is www.wyomingwomen.org, or look for us on Facebook. All of the participants are muted to reduce background noise. So if you have questions, on the lower section of your screen, you'll see a chat box. Please type your questions in there and I will forward them on to Kim. And now, without any further ado, I present to you Kim Vincent. Kim, take it away.
Well, thank you, Waldo, and thanks to everyone for being on the call today. I know you're all really busy, and I appreciate that you're taking the time to try to learn a little bit more about how you can improve your business reporting. And you're probably really challenged by the notion that you're trying to do it all for your business. So you're doing the customer service part, you're probably doing some of the product and service delivery, and now we're asking you to do a little bit more of the accounting piece. And I think when we see how we want you to be involved with the accounting piece, I hope that what we're talking about today will make sense to you for carving out that piece of time to really be able to quickly understand your financial story and be able to communicate it to others. So what we're going to talk about today is I always take the opportunity to put in a plug for the Wyoming Women's Business Center. I think it's a remarkable organization and they do some great work there. I'll tell you a little bit more about some of those programs. We'll talk about what today's objective is. Why is financial management so important? And then the accounting tools and considerations that you can put into practice with your business, because we want you to be able to tell your story. And a lot of times your story is going to revolve around some of those key metrics in your business. I mean, that's what's going to be driving the storyline. So we'll talk about what that process looks like. And while the introduction was really phrased in the QuickBooks world, I'm going to show you a couple other tools that you can use if you're not really embracing QuickBooks or using QuickBooks as a tool. So there's so many accounting softwares out there. They all have reporting functions, and I'm just going to highlight some of the reporting functions and how to change them within the QuickBooks environment. But I'm going to show you another tool that we've used with clients at the Women's Business Center that helps them bring all of their financial information into one container. During our last program, we talked a little bit about the shoebox is that container, and what you want to have, your goal should be, is to have one place that you go to for that information. And we don't necessarily want you sorting through that paper all the time, but you could have the objective is to have it summarized in one place, where at the end of the year you can turn your file over to your accountant or somebody to help you with the tax prep piece, but you're really knowledgeable about what's in that container and the relationships for the data pieces that are in that container. We'll talk a little bit more about why that's so important. So the Women's Business Center, awesome organization. It has a physical location in Laramie. They have an office in Laramie, but they do support folks all over the state. So they provide the business services, the planning, counseling. They have a number of different tools. They can work with you remotely. So just like this, you know, we can get together over the phone, we can share a screen, we can talk about what your specific questions are for your business. The Women's Business Center also offers networking and educational opportunities. We support a number of roundtables across the state because we think it's really important that you kind of make that step out into the next business community that's beyond your business, and you become a part of that local community, and you network with other businesses in that community, because that's a really great way to learn what's going on and learn different tools. And then another thing that's in the mission of the Women's Business Center is looking for ways to provide access to capital for their clients. And it's, you know, you don't have to be a woman to be a client of the Women's Business Center. And I mean, the goal is to work with women. Part of our funding comes from the SBA's Women's Business Center's office, but we love to look at all businesses, and you know, the criteria here is that you've been turned down by a bank, and that way if you do need access to capital and you have a plan and you have a letter of denial from the bank, then that's the type of deal that we probably want to take a look at. So there's loans, and there's also a match savings account. So, you know, take the time to get to know the Women's Business Center and maybe schedule the time to talk to Jonathan or Waldo. Okay, so when we talked about this accounting series and what we wanted to accomplish, you know, the idea is to start out and look at all the tools that are out there, and as a business owner you have to figure out at what level you're going to participate in this. So at the previous class we talked about, you know, okay, so that, you know, there's bookkeeping and there's accounting, and you know, there's a role of controller. I mean, there's a lot that's potentially going on in the, you know, financial element of your business. So at the very basic block is going to be, you know, the firm's accounting system, whatever you choose to track that data. And what we want to talk about today is actually taking that data and manipulating the data and putting together some really meaningful reports for your business. And typically those reports are going to, you know, revolve around the key metrics for your businesses. What are some of the best practices that you can put into place? We'll review a little bit of what we talked about last time, and then we'll move it forward into how that applies to the reporting activities for your business, and then what types of reports should I be using to really manage my business. So so if you're responsible for the bookkeeping piece, that's really kind of the recording and the classing, all of the accounting transactions for the business, and the techniques that are involved in that. So you might not be doing that piece. You may outsource that piece, but at a minimum you have to be able to go in and understand what your chart of accounts is, how you want your transactions to be categorized, where the records are kept, and you want to be able to go in and review the records. And there's some really simple tricks that we'll talk a little bit about when you're pulling some of your financial statements. So this list here, I'm going to put a qualifier on, is published by QuickBooks. But, you know, they really see a lot of common mistakes. They do a lot of customer support. They have a lot of advisors that work with clients. And, you know, I think for me it really comes down, you know, to time management, because if you don't have a process, if you haven't said to yourself, okay, I have to dedicate 4 hours a week to my accounting and to my bookkeeping, and all of a sudden you find yourself falling behind in entries, and you think you have to be really uber proficient at the software. That's not going to be the case. I mean, you have to be able to understand the financial reports and pull financial reports, but you don't have to be an expert at the software, and sometimes we struggle with when we hit a roadblock and we think we're not going to do something right, we just put off doing it. And I say just jump right in and try it, because even if you make a mistake, it's just so easy to go in and fix the mistake, believe it or not. I know a lot of people have a hesitation for that, but we really have to embrace those reports as the tools for managing, because there's a lot of great information. We're so buried in the data that we forget that there's really valid information that we want to get back and look at the relationships in some of those transactions. Another thing that QuickBooks lists is people are mixing their business and personal finances, and so I'm working on the assumption that we all have a separate business account, and we all are, if we are taking draws out of the business, we're recording them as draws, we're not recording them as salary. We're maintaining all of our receipts, even if it's like something for $5. I mean, there are some cutoffs in terms of what you have to keep paper for, but I say just keep it all and file it once you record the information. And when we're when we're in a hurry and we feel like we have limited time, sometimes we make math mistakes. I think some of these tools help eliminate that part of it. And I think if we don't want to focus just on the short term. We want to look at this reporting process in the context of the sustainability of your business, because the information that you're going to be getting back in this process will really help you tweak and make the changes that you might need to as you move forward. So we probably have all had experience with hiring the wrong person, and sometimes we think that technology is going to be the solution where that's not really the case. And sometimes we just have to let some of those tasks go. When you come to a webinar like this, you're wearing multiple hats. You may be the owner, you may be the accountant, you may be the customer service person, and we're really slow to delegate. And part of that is that we might have hired the wrong person and don't feel good about delegating to them, but at the same time, we really have to focus on the tasks that are mission critical and be willing to let some of those other things go. So, so what we want to do is look for the accounting tool that's going to support you. I've worked a lot in QuickBooks. I think it's an awesome tool. There's a lot of other tools out there, and the benefit is you hopefully really only handle that piece of paper, that piece of data one time. So we have to have a process for collecting the data, and the example here is somebody's just putting it into their check register. That's one way to do it. That's one way to know what your checking account balance is. It's one way to categorize all your expenses, but you're going to have to go back into that and look at it again and create some sort of summary that you can total all of your rent expenses and total all of your marketing expenses. But this is one way to do it, and I know people that do it with a big 12-column ledger, so that they're just reporting it by hand, and then they total it at the end of each month by category, and you have your profit and loss for the month. So just think about those accounting practices where you're really creating a process that makes sense for you, because we want to get to financial reporting, and the whole idea here is to say, okay, at the beginning of the year I said I had a certain goal for my sales revenues for this year, and I want to be able to go in and compare to those goals. I might have had a certain goal for my margins, where I'm selling inventory and I want to maintain a certain cost margin. I have the ability at the end of the month to pull that report and see how I did. If I'm trying to maintain a keystone markup so that all of my cost of goods sold are 50%, I'll be able to see that right away, and I'll know if maybe I need to adjust my prices. So so when you're telling your financial story, it's not always going to be this, this huge increase in growth, but it needs to be managed, because if you're putting time into doing it, then you really need to put some effort into measuring what you're doing, and keeping track of your hours, keeping track of your expenses, keeping track of your revenues, because we want to understand your critical metrics. So if I'm a small single member LLC, and I provide accounting services to the small business community, then my key metric is going to be the percentage of my time that's billable, because I am spending a lot of time marketing. I may be spending some time, helping customers that I'm not billing them for, but I've got to be able at the beginning of the year to think about what those critical metrics are, because we're going to be tracking those, and I'm going to be able to give myself some feedback saying, wow, over the course of the year I spent 2,500 hours working, and I was only billable for 1,500 of those. What do I need to change? And having real-time reporting along the way is going to really help me be able to do that. So from the previous class, we really talked about now you're going to create some kind of process, and it could be just a calendar where you're setting aside a certain block of time, the same block of time every week. We're reconciling our checkbook. We have some way of keeping track of the cash, some way of keeping track of our owner contributions, because when it comes to creating financials, I think you should be doing it monthly, and I think you should be comparing it to what you thought you were going to be doing. So at the beginning of the year, we set out the goal of, I want to do $5,000 a month in revenues. Here it is, November, and I really haven't looked at the year-to-date. Probably you have. You have a sense of what your totals are, but you always want to be comparing those actuals to the goals. And this is something you can do pretty directly in QuickBooks. I'm going to show you another tool that we use in Excel to do that. We're going to compare to our year-to-date to our goal. We're going to compare our year-to-date to our previous year, because the whole idea is to have real-time feedback, knowing what's going on. What are the things that I might need to think about changing, because I'm going to make some adjustments as I go. And that's a really important part of that, is knowing when I tweaked it and knowing what the impact of that particular adjustment might have been. So what you want to do is think about, what the really important information is. All of its data going in. There's a lot of data going in, and this is like a really typical report that you could look at in QuickBooks. And the very basic level is I'm looking at my income versus my expenses, and I think you want to look at it over time. I don't think you want to look at it at 1 month at a time. I think as you develop and close August, you want to be looking at August with regards to January, February, March. You're looking at what those trends are, and you want to be able to, I think, look at it visually and quickly and get a sense of, okay, now this is really good, because every month I can tell immediately every month I'm profitable. I have income, I have expense, but my green bar is always bigger than my red bar, so that's really awesome. And then I want to be able to, so I'm going to think about what those critical metrics are as I have the opportunity to create reporting templates. I need to think about the time frame that I'm going to look at, because I could take this report and I could collapse it by quarter, or I could collapse it into the year. And it could be that the quarters are more meaningful, because I do have some seasonality going on, and I want to be able to, I can get a lot of data if I look at the quarters for 2011 versus 2012 or 2016 versus 2015. So the time frame is going to be really important. I want to really think about what my visual format's going to be, because maybe I am a list person, and maybe I can do really well just looking at the profit and loss and thinking about what I might need to adjust. And when you're looking at your profit and loss statement, you see all your revenues, you have a list of all of your expenses. It's a really good way to review the data, because you can deep dive into the different categories and see if there's things that were miscategorized that you could change. And then you want to be able to have some visual of your expense summary. And I think this pie chart is a great way to represent the expense summaries. And for most folks, it's going to be, the biggest piece of your pie is going to be typically, if you're selling products, it's going to be your your cost of goods sold, the product costs for getting those products out the door. If you're, if you're providing services and you have, probably the salary and the payroll is going to be a big part of it. And you can look at your expenses as a percentage of your business, and you can compare to industry averages. So like this particular business is the payroll expenses are about a third. And you can look at data for Wyoming, for the different industries in Wyoming. You can look at smaller regions, but typically you could look at Wyoming as a whole to see how, if you're in the hospitality or restaurant industry, you can see what your food costs are as compared to the rest of the state or the region. You can see what your labor expense is as a percentage of your revenues, and those are all really important metrics, because when you get to the bottom line and you want to create more income, more profit on that bottom line, you have to say to yourself, well, what are my options? How do I do that? Well, you can just sell more as is without any differentiate, without changing prices. I could just find a way to get my income higher. That's going to hopefully allow for more profits. I could find a way to maybe increase my income by raising prices because maybe I haven't created enough markup. I can find a way to reduce my expenses. Those are options I have when I'm reviewing this data to figure out. If I'm losing money, I don't want to be in that situation, but I really want to understand how I can tweak it so that I can improve that situation. So we're going to think about, what are the things I want to track? What is the critical time frame for me? How do I want to look at the data visually? And then how often do I need to look at this data? So there's some, like we talked about, I really believe that you should be reconciling your accounts. If you have a lot of transactions, I think you should be reconciling your checking account. I think you should be looking at your credit card statement, and you should be able to reconcile to your credit card statement in a very frequent basis, because you want to be capturing those expenses real time and looking at what those expenses are. But you don't necessarily need to pull these reports every week. You could definitely pull these reports monthly. So let's talk about the tendencies, trends, and topics, because not everybody needs to pull the same reports. And if you're in one business and you have a set of reports that really make sense for you, it may be all you need. You could be doing it in a really simple fashion. It doesn't have to be really elaborate, but it's going to be completely different from the way that your neighbor looks at your data. So, one other thing I want us to think about when, I guess I'll show it to you when I jump into this Excel thing. So now I'm going to change screens. And Waldo, I just need you to make sure that you're seeing the correct thing. So I'm going to jump into QuickBooks, and if you could let me know if you can see my QuickBooks screen.
Yes, we can.
Okay, very good. So again, the reporting function exists in all types of software. I'm just the most familiar with QuickBooks. I really like QuickBooks. And in the reporting function, there's a lot of set reports that it can, I'm going to close this, it can pull on. So if we wanted to do a profit and loss standard, it automatically defaults to a certain period. And this is actually set up, I don't know why they did this, but it's set up for 2018. But you could change the time frame that you look at the data. And you could change the detail that you can look at the data. So like, let's say right now we want to look at, we could tell it we want to look at that, and it's going to provide that report to us. And then we could go up into the reports, and I do have to confess that I am working in QuickBooks for a Mac, and I'm not as familiar with that, with the menu there, but there's a lot of, I usually work in it on a desktop. I just don't have internet access to that computer right now. So when we look at our reports, you can do, this is one of the first places that I start, is I collapse a report. I mean, because otherwise it comes up with a whole lot of detail, and I don't necessarily want to see all of the detail. I just want to hide a little bit of that right now because I just want to look at overall my total income, my total costs, and then my total ordinary income. I just want to get that snapshot right there. I have $67,000 in income, and I've got about I want to say a third, but that's not right. I want to be able to relate my total cost of goods sold. It's about a little bit more than a half, and I see that my gross operating margin is going to be, 28,000 out of that 67. And I could actually go in and change this so that it would calculate, let's see, it would calculate the percentages for me. So I can go in and do it so it makes sense. And right away, okay, I'm looking at 100% of my income, and 57% goes towards the cost of the job and the job expenses. And this is a construction company, so this is going to be really, really high labor and supplies. But it's that 57% that I want you to think about and focus in on is creating a metric, because this could be a little bit high. I mean, this is higher than what you anticipated, and it's saying that you might not be, pricing out your jobs with enough income in terms of when you're doing the bids and when you're, projecting that construction income. And then I look at, well, okay, but I've got, 58% goes towards the cost, could be a little high for the industry, and I've got an operating margin of 42%. So that's what's going to cover all of my other expenses. And I've got a great net margin on the bottom with 24%. So if I'm a sole proprietor, I'm not paying myself necessarily through the payroll expenses in this thing. I'm not showing maybe my income's not showing up as a job expense here, but this 24%, if I'm a sole proprietor, this is what I'm going to be reporting for income, whether I took one, draw on the business or not. But people are getting a little more sophisticated in how they set up their LLCs, and it's possible to set up an LLC to look like a corp so that you can pay yourself through the payroll function. Even if you're an officer or an owner, you could still be considered an employee. So so at the very basic, we start with, I need to get this out of the way here. We're going to start with our profit and loss, and we're going to look at it over a period of time, and we can look at it compared to next year. This is going to be our year to date. And so when I go into the report, I can just pick this category right away, and it will show me, it knows, at this point in time, I've picked the date down below. It's going to say, okay, I'm going to compare this December from 12/1 to 12/15 to the previous time. I mean, this is a great place for you to be looking at reports. I think the previous year comparison. I think this is really powerful because it shows you, wow, I went from 187, and granted these are really big numbers. I went from 50,000 to 100,000, whatever that is. This is a way to get in there, immediately track it, and then see how your costs have changed and see how your operating expenses have changed. There's also the opportunity to go in and do it by job, which is really good because you can see which of your customers are more profitable for you and which customers you might have done a better job of creating the estimate for. You could go in and change it and look at it by class. So like I may have inventory classes that are counseling work versus financial work versus grant work. I mean, there's just so many different ways you can look at it. I don't want you to create a number of classes just for the sake of having classes, but it makes sense if you really need to start looking at the data with regards to the type of activity, because you could look at one area that may be a lot more profitable for you, or one customer that might be a lot more profitable and what the heck, just focus on that particular activity. You don't necessarily want to do it all, especially if you're losing money in some categories. We could look at expenses by our vendor. We could look at, some of these will come up graphically. There's that graph that I showed you before where you could easily from your dashboard just go in and pull a report and be able to look at profits and your expenses by category. The way that I really like a pie chart is when I'm looking at my income. I really like to look at product mix. So if I have a store, or if I really sell my hours for consulting and I have different types of services that I provide, I want to be able to break it down into different classes and then come up with a product mix of what I'm selling the most of, and then thinking about where I'm spending the most amount of time in my business, and if there's a good relationship there between those two pieces of data. So something that we're going to talk about in the next class on December 16th, we're going to dive into the balance sheet. A lot of people don't even typically spend a lot of time with a balance sheet, and if you're a sole proprietor and you're filling out a Scheduled C, it doesn't even really prompt you to have a balance sheet on your income tax return. But I think a balance sheet is really important, and we're going to spend time on December 16th talking about why you want to create a balance sheet, because it really is about looking at the net worth for your organization. You know, you're putting a lot of effort into building something that's very tangible, and I think you want to be able to document it and look at your balance sheet and know, I'll go back to this one, what assets you've created and what kind of liabilities are going along with those assets. So balance sheet is one. We started with the profit and loss, and the profit and loss actually flows into the balance sheet for that point in time. So those two are always going to be connected. As you're making changes in your business, it's going to show up in the profit and loss if it's expense, but it ultimately flows into the balance sheet. Some folks worry about a statement of cash flows, and I think the best way to work on cash flow is to do more of a cash flow projection, and I'll show you a tool that we have that you can play with just so that excuse me, over the course of the next year, you know, I anticipate the following incoming revenues, and I expect the following outgoing payments. And what this does is, this is after the fact. It's showing you the sources and uses of cash, so that, you know, if you're paying down on your payables, or you're, you know, you're paying you're accruing liabilities, you don't see this used as much as you used to. Usually now with the cash flow is really where you want to do the forecast. In terms of, I have a lot of money coming in, I know I need to make payroll once a month, I need to be able to take a draw once a month. So lots and lots of options in QuickBooks. If on the sales side of it, it's awesome because here's where I'm going in and I'm looking at sales by customer. I'm looking at sales by, these are the items that I'm selling, so I could go in and look at a percentage of my sales by each item type. I could look at, again, a sales graph. The one thing that when we're in sections like we're looking at sales reports, or we're looking at receivables reports, or we're looking at the vendor reports, we have to keep in mind that when we've entered those customers, we've identified them as a customer. So when you enter a transaction and you show a deposit, you have to have put that deposit, related it to that customer, and that customer actually has to be recognized by QuickBooks as a customer. So the data input part is really important, that people are going in correctly, items are going in correctly, expenses are going in correctly, because these reports don't always make sense if you're not generating invoices. You're not going to show any receivables. And you're not going to have any customer balances if you record everything as a cash sale. So just, you know, there's a little bit of effort that needs to go into correctly categorizing stuff and your chart of accounts, and knowing what expenses are related to which category of I don't know how, when you put an account in, you categorize them as other or as a vendor or as a customer. So those are important notes to keep track of. So so customers and receivables, this is a really good one because a lot of times, and we can do this at the Women's Business Center, is like if we anticipate loan payments coming in and they're not coming in, I mean, there's some receivables outstanding. This is just so critical for your cash flow. And you could go in and look at who's current. So these are invoices that I've just issued versus who's overdue, and those are the ones that are showing up in the 31 and greater category, because this is a great management tool, is to really be tracking who owes you money based on, again, you have to have created an invoice for that to happen. And we can go into a great amount of detail here and see that we have this is a huge asset. You know, this is showing up as an asset on my balance sheet when I'm looking at my AR, my accounts receivables, and I want to be confident that this money is coming in. So, and I don't have to do collecting on a lot of those things. A lot of other really detailed reports. If you do a lot with, you know, when you receive a bill and you enter your bill for accrual, there's a lot of reports that can get generated based on what you owe and what you have to pay, and where those I don't really spend a lot of time doing vendors and payables, because most of the what happens when I would encourage you to do, a lot of my recurring expenses like utilities and rent, and a lot of those just come up as electronic payments so that I can memorize them in QuickBooks, and every month they get posted, or I can just enter the amount in QuickBooks when I know it's going to come out of my account, and I'm not entering the bill at all. I'm just entering it when it gets taken out of the account, so I'm dealing a little bit with a little bit more of that on a cash basis, except at the end of the year I will go in and enter those so they get recorded for this current year. If you have a lot of vendors, you know, you have the ability to issue 1099s through QuickBooks. And really what it does is it allows you, it sets up the print function so you can buy the forms and then print them with the data coming out. Inventory reports, you can take this and create, the thing that I love for accountant and taxes is you can create a trial balance at the end of the year. You can create a trial balance and compare it to your previous year, just to make sure you haven't made any changes to the previous year's income tax reporting. You can print a general ledger for your accountant, and a general ledger is just every transaction if you want to share that kind of data with them. But otherwise, you could just take this and download it to and share it with them on the cloud so that they could log in and see your QuickBooks file. And you know, you just want somebody reviewing your data and reviewing your transactions. And the best place to start with that is just looking at your profit and loss statement, because you can look at this, look at a statement like this, and drill down into it. So if I saw something right here where typically I don't want to see negative amounts in my expense, but I could drill down into here and see what all is included in that total just by double clicking on the number. And then I can click even farther and look at the data, and this is where I entered a bill. But here's where I categorized it, the item, you know, where it was equipment rental. So there's just a lot you can do, but what I want you to do is, you know, bring it back to what do you really need to do in terms of getting the basic elements of your storyline. You know, what's going on in terms of, am I profitable? Am I billing myself for all the hours? Am I you know, pricing my stuff correctly? One other thing you can do with QuickBooks is, you know, yeah, they have a great report center, but I like to look at really longitudinal data, and so when you're in here, you can export any of your reports, which is awesome. So I could go in and I could pull a profit and loss, and then I could go in here, I could collapse it, I could do whatever I want, and I could export it. But when I export it, it'll go into an Excel spreadsheet, just like that. So if I collapse it, I've lost the data. But I can do a lot with, let's say that I wanted to do this right here. Oh shoot, I don't want to do that. Let's say that I wanted to do it 1/1/17 to 12/15. Now right now it's just showing it by total, but I could go in and break that down and look at it by quarter, right? Because I can see, okay, January through March I'm at 46, I drop to 35, I go up to 58. I can see that trend, and then I can further export this into QuickBooks and do more with my data. I mean, I can plot this data, I can look at my cost of goods sold. Overall, you know, I can do this in QuickBooks, but I really like to archive stuff, especially with the planning piece. I like to work in Excel because I'm going to show you an example. So right now, are there any, I mean, I'm throwing a lot of information at you, but are there any questions with regards to how to...
I have one quick question for you, Kim. You were
Okay.
talking about invoicing income versus entering as a cash sale. When do you know if you should, what's a guideline or a rule for knowing when to create an invoice and when to just show a cash deposit?
Okay, well that's a really good question. So when I'm selling something and I'm collecting the money right then, I can go in and generate a sales receipt. So it's, even if it's you know, it's got to be deposited in my bank a couple days later if I get like credit card sales. When I exchange the goods for money, that's a cash sale. When I exchange the goods for the promise that I'm going to get a payment, that's when I'm invoicing them. And the benefit of invoicing is that, you know, you're extending terms to your customers, so that may encourage their business. They don't have to pay you right away. And let's say if your terms are net 30, you know, you issue an invoice, it shows the date of the invoice, it shows the terms. I expect payment in net 30, and I can give you a discount if you pay within sooner than that. And it allows you to issue statements then. Once you can't issue like a statement on cash receipts, you're just going to be able to, if you wanted to issue a customer statement, it's going to have to do it. I really don't like this screen, so I can view all transactions. I want to go in and just look at one of these invoices. All right, so all my sales transactions. So this one is going to be an invoice, and so I've delivered the goods, and they've delivered a promise to pay me for the goods, and that's when I'm going to be able to see receivables. And it's just like me buying from, you know, on account at ACE. I go in every month and I buy my supplies and I put it on account. At the end of the month, they send me a statement showing what the total of all my invoices were. So, and that becomes my payable. And when I do that with my customers and issue invoices, that becomes my receivable. Does that make sense?
Yes, thank you very much.
Okay. All right. So I want to show you one thing that we do, a way that we work with customers at the Women's Business Center, and this is a tool that at least I like to use, because a lot of times when folks come in and they have an idea and they want to start a business and they're really excited and they think they can do it, you know, for just a couple $1,000s, and what we want to do is we really want to work them through what the selling process looks like, and because you're not going to have sales on day one. And what you want to think about is how long does it take you to ramp up if I think I have, this is going to be like a spreadsheet that's all laid out. I can put my different types of products in it. I can put my average selling price per unit. I can put my average cost per unit. And all I have to do is go through and I say, well, I'm not sure that I'm just going to be going along here doing 0, 0, 0. Let me make this bigger because I'm sorry, it is really small. So I can go in and this is just a planning tool, but I'm in the process of doing this plan and thinking about what's going to happen. I'm going to lay out my financial statements for the year. And I can just go in and tweak. I'm going to just focus on the main products that I sell, and it could be a service. It could be my hours that I'm selling here. And if I'm outsourcing some of those hours, I might, have a couple of contractors that I'm paying $24 an hour, but I can bill myself out at $80. And I could do that for every product. And it comes down here to the total, and it carries that total into my income statement. And again, this is really small, I apologize. But this is something that you can go in and you can just tweak, and it'll say over the course of the year, what do I think my total sales are? I know what my expenses are. I could lay those out, and I could create a pro forma income statement. This is what I think I can do over the course of the next year, and then all of that flows into my cash flow. And this is really important because if I think that I can start the beginning of the year with $500 and I go into my cash flow, this is going to show me right away. I'm going to make this a little bigger. At the bottom line, well, I could do, and all of these are flowing from someplace else. I'm not entering this data, I'm just entering it in one place, and then it gets populated based on the links within here. So right away, I think I can start the business with $500. I'm going to be spending $2,200 and making $1,200. Well, I'm negative the first month, right? And this is where you're going to be looking. This is really important information. I run out of cash right away, but if I actually open the doors and I have $5,000, I can go into this and my cash flow, oh cool, I can stay positive until about, the first 5 months, and then I'm really building up my balance. So great planning forecasting tool is to think about the cash flow budget, think about an income statement, and then I break the income statement down into what does it take to get to that level of revenue, because I could do, I could just easily change these numbers based on my experience or previous year or what I think the market will bear, and I can, boom, it just automatically updates my income statement, which automatically updates my cash flow. And all of this then resides in a place called my dashboard. And this is what I'm driving the bus with, because I know that my first year, it's all based on that first year of activity. I think I can do, and I'm really just coming down to the core P&L. My revenues, my cost of goods sold. I've set up the metrics up here where I think my direct expenses run about 30 to 35%. I think my G&A expenses might grow a little bit, but I can easily change that. And it automatically just plops out in the sales and income summary. My marketing expenses are probably going to go up a little bit, but my base year right here, I can earn $516 based on all the data and all those relationships that I put into these other spreadsheets. And for me, this is a better place to work on the planning horizon than in QuickBooks. I mean, I can go in and put all this into QuickBooks once I create my budget and once I think about what I'm going to have to do, to be profitable. But it's one place to come to say, oh, cool, look, if I were to grow 50%, or if I could double in my first year, it'll automatically change the sale and income summary based on that assumption. And if I could double again the following year, wow, that would be awesome, because that's where I really need to be. where I want the net income to be. Is it, you know, that in 2016 I think the net income is going to be 56,000. It's based on this product mix. This just coming out of my sales forecast data. So a great planning tool. And you know, some people really do a lot with Excel in terms of collecting their data, their accounting data. So I've set up a checking account register in an Excel spreadsheet that'll just, you know, you enter all your checks and you enter all your deposits and you categorize them, and then it has a summary at the bottom, and you could go in and each month just look at what total income was. You could look at expenses by category, and you can just see what the running total on your checking account is. So there's this continuum of tools where you can start with the shoebox, which, you know, it's a great way to collect the receipts, but you've got to be able to really manipulate the data into more meaningful information. So you're working on that continuum, and then you're working on your time continuum. You know, how involved can you be in this process? How much time do you have to really dedicate to the bookkeeping versus going in and reviewing the bookkeeping? And you know, you're going to be wearing the accountant hat, because you have to be in a position where you can understand the financials, and you have to, I mean, you want to know what's going on. You want to know what your margins are. So you pick the tools and you decide how much time you have to spend, but the ultimate result has to be real-time financial management, and you're going to be the best person to monitor it. You know, don't wait till the end of the year and turn your information over to your accountant. You figure out the tools that make sense for you. You're making timely assessments on whatever those critical metrics are for your business. And you know, it's a challenge because there's a lot of transactions that go into one business model, and you really do have to record all of those transactions in a meaningful way. And so it does take time to do that, but I think if you create that practice of once a week going in and doing it and keeping on top of it, at some point you probably will get big enough where you can outsource some of the day-to-day entry, but you can go in and check it, and you have the ability to go in and review it without being completely accounting savvy or software savvy. But you know, in the end, you really do want to have a professional on your team that can help you with some of the more appropriate methods, and maybe industry-specific reporting that you have to think about, or there's opportunities, you know, for tax credits in your industry. So it's a good investment to meet with that accountant once a year and have them help you with the tax prep piece and have them go over what you've done. And you know, it's a very important relationship, that having somebody like that on your team. So don't forgo that. So that's what I have for today. I was trying to keep it to 45 minutes. I went a little bit over, but you know, we're really trying to provide meaningful information for you to, you know, to model your business. And if there's other things that you'd like to see brought in as topics, feel free to, you know, email somebody on the team to say, hey, could you share more information about this new topic that you're hearing about. We'd be happy to prepare that for our clients. So just, you know, keep us on your radar in terms of connecting and letting us know what services you might need, and we'll be happy to respond. I see a question from Kelly.
Kelly asked a question about
Barb asked the same question. So hello, Kelly and Barb, and thanks for coming, and I'd be happy to send the financial planning workbook out to both of you. When do you assign a class to your expenses? Okay, so I'll give you the example of, so let's look at the Women's Business Center. So the Women's Business Center has a number of different revenue streams depending on the grant that we're working on. And when we have payroll expenses that are associated with that particular grant. We have material expenses that are associated with that grant. So the grant becomes our class. And if you have like 3 or 4 different revenue sources, and you have different activities that support those revenue sources, like some of it might be inventory, some of it might be a service that you provide, that's when you would really be sorting your expenses by class, is if you want to align it with a different class of inventory. Does that make sense? And we could talk a little bit offline, Barb, if you want to do this. It's just another field that you populate as you enter that expense. There's going to be the chance over on the right side. You have to set the company up to have classes, but it would be over on the right side. You enter that check and you tell it what class it goes to. So if we have, Waldo doing IDA work, we could assign expenses on his timesheet to the IDA class. And at the same time, we might have IDA income as a, so that's when you would use it. I hope I didn't make that too complicated.
All right, thank you, Kim, for all that useful information. I want to thank everybody for attending today. Kim has that financial workbook she could share with you if you contact her direct. I also have a copy of it. If you contact me at the Business Center, I can send that to you as an email attachment. So we want to thank you for joining us today. Our next webinar will be at noon on Friday, December 16th. And as Kim mentioned, the topic will be, what is a balance sheet and why do I care? I also want to mention that we do have some one-on-one counseling available through this series. If you need individual work in setting up your bookkeeping or accounts, please contact us and we can arrange for that. And we ask that you fill out the survey as you leave the webinar today. It helps us track those who are in attendance and gives us ideas for future webinars as well. So if you have any further questions or need some assistance in any of these areas, please feel free to contact us. And with that, we thank you for joining today and look forward to you attending with us next time.